Today is Sunday, the 23rd of January, 2022, and here's your quick market update. Bottom line is the markets got hammered this week, and it's all because of this guy. Yeah, that's Jay Powell. He is the chairman of the Federal Reserve, probably the most powerful guy in the world because he controls the world's largest bank, the Federal Reserve, and this guy has been just printing money for the last 13 years. So now he's saying he's going to raise rates. He's going to quit doing what's called quantitative easing. He's going to quit their asset purchases. He's tapering. Why hasn't he tapered now? That's the funny thing. If inflation is such a big concern, why are they waiting another month to taper? Why aren't they just tapering now? Goldman Sachs says they think that there's going to be 4 interest rate hikes this year, but now they're saying they're more possible due to the surge of inflation. They say we see a risk that the Federal Open Market Committee will want to take some tightening action at every meeting until the inflation picture changes. They're predicting a 1/4 point per raise, which basically will give us a 1% increase. Now, the Fed thinks that we believe what they say, that our prices have gone up 7%. Well, my inflation rate hasn't gone up 7%. I don't know about yours, but my gas is up 50%. My eggs are up 38%. My chicken and meat, that's all up 30, 40, 50%. My mayonnaise doubled. It's not up a little tiny bit, 7%. I don't care what they say. But my basket of goods may be different from your basket of goods, may be different from Jay Powell's basket of goods. So they're going to minimize it. They're going to lie. That's what they do. And they don't want to panic anybody. But the markets know what's going on. That's why you had a huge, huge sell-off this week. And, will it recover? Yeah, probably. It's going to recover at some point. But right now, there's panic selling going on. And it's been happening kind of for about a month, 2 months, right? So you can look at the numbers for the indexes. But what you're seeing beneath the numbers, the individual stocks, some of the individual issues have gone down 50, 60, 70%. I'm going to show you a couple in a second. You're going to be amazed at how much these assets are decreasing. And people say you should always have assets during an inflationary period. You should have real estate, you should have stocks, you should have gold, Bitcoin, whatever. But you're seeing a big deflationary hit going on right now because nobody knows where to go. And so this Fed guy says, well, we're going to raise rates and that should calm everything down. The problem is it's not just a rate problem. That's exacerbating the problem. That's the main cause for sure. But, we have supply chain issues. And, there is no politician that I will believe right now, not that I ever do, but the one guy that that gets the power of the pulpit is he gets to tell everybody that they're doing what they can about the supply chain issues. And if you think about how many parts a car has in it, right? And there's a chip shortage. You get one chip that's short, that car is not getting delivered. So there's a huge supply chain issue just in the car business, right? Imagine all of the other things. Okay, milk has got fewer ingredients, right? And you're going to start seeing supply chain issues everywhere. And they're not going to be able to fix them because there are problems everywhere. And the problems are exacerbated by inflation. We, I believe, are at the end of this inflationary bubble, and it's going to burst, and it's going to leave the dollar in shambles, or something bad's going to happen, some black swan event. I don't know what it is because I can't predict things. I just am telling you this, nothing is adding up, right? We have basically negative real interest rates right now, where interest rates that they say are 1.5%, 2%. But, even with their 7% conservative, it's a negative 5%. You're losing 5% of your buying power every year. Now, I believe inflation is over 20%. And my numbers are able to prove that. And if you're not making 20% on your assets, you're losing 20% in buying power. Imagine having $1,000 and then next year only being able to buy $800 worth of stuff. So I think the Fed is in a pickle. I think they've printed money for so long. We've been addicted to it for so long. The government's basically said, let's just spend some more money. And it's not just our government. And so now they're saying, well, let's just print some more. Well, they're not saying that. They're going to say that, I think. And, I know it's a fool's game to make predictions, but I think you should be ready for whatever happens. The whole world, including Goldman Sachs and the Fed, are thinking they're going to raise rates. But the market can't continue like this because the politicians that are in office are going to say, no, we can't have market crashes anymore. Please, please, let us print more money. Let's enact some emergency stimulus package because, everything's going down and we need to get jobs buying votes, right? So that's the major problem. I think there is no choice for the Fed but to say, well, maybe on their Wednesday Federal Open Market Committee meeting, they're going to come out, well, maybe we're not going to, address it as strongly. You're going to hear some dovish words, I think, in that meeting. It's going to make the market shoot back up, and they're just manipulating the markets, right? So that's what's going on there. Now, what else is going on is tech stocks had their worst week in almost 2 years. And I'm just going to take a couple of minutes to talk about two stocks that are in that mix. And one of them is Peloton and the other is Netflix. Now, Netflix was down about 23% on Friday on a lower than expected subscriber growth. Now, basically, they took all their subscribers that they might have gotten for the next 3 years back in, the early, 2020 when we had COVID and the lockdowns, and everybody, applied to Netflix and became a subscriber. And so anybody that would have become a subscriber eventually just became a subscriber then. They were stuck at home. And so they crammed all of those numbers in, and you saw the stock price shoot up. And then now those people are going back to work, and Netflix is raising its prices, and there's a lot of competition, and Netflix is going down. So I'm going to show you a chart about Netflix in just a second. I'm also going to show you a chart of Peloton. Now, this one, you could have seen this one coming, I think, right? So Peloton is this stay-at-home bike thing. They make a really nice stationary bike. Now, I don't know why you don't buy a bike and lift up the back tire, put a little weight on it or something, but, Peloton has these really nice bikes, and they got a screen on them, and then you get a subscription model going, and then they got these hot people all over the world that are telling you, pedal harder up this fake, mountain or whatever. And so people have been like, oh my God, this is the greatest thing. But we forget that we don't like to work out after January, right? We forget that stuff. So people in the beginning were like clamoring for Peloton, right? And Peloton went into this production mode, and they were making money, and the stock price showed it. And then people were like, yeah, well, I don't like working out as much as I thought I was gonna. And, maybe that Peloton's starting to hold some clothes. It's this glorified expensive clothes dryer now. And, people aren't using it as much. They cancel their subscriptions. And Peloton's also having some supply chain issues. So you put all these things together, and you're going to see this stock chart, and you're going to be like, what? But you could have seen it coming, right? It's like when people were all clamoring to buy GoPro, I was like, I don't get it. It's a nice product, but as soon as Apple comes out with a waterproof phone or a waterproof case, like, you don't really need the GoPro as much. And then there's a zillion knockoffs now of GoPro. So the stock has come down. There's a zillion knockoffs of Peloton, right? Stock has come down. And Netflix has got competition from Disney Plus and, Paramount and all these different services. So they're starting to come down too. Take a look at these charts. So the first one is a chart on Peloton. And if you look at Peloton, like, this is ridiculous, right? From 2020, March of 2020, where it hit its bottom, it bottomed out and it went straight up. It went from like 20 to 180. That's almost a 10 banger, right? If you put in $1,000, actually, if you put in $10,000, you'd have had $100,000 by the end of that. If you picked the top and then you decided to sell right at the top, but of course, that's when you're probably wanting to buy more because you're getting a little bit euphoric. And then you saw this thing start to come down. And there were some warning signs that this was going to be a big down. And look at all of this red on the right side of this chart. You see all that? That's all the big sellers. Look at the red volume on the bottom. This looks the opposite of all this pretty blue volume on the way up, right? There's a lot of volume setting this thing up. This is Peloton, right? And this is what happens when you get sucked into one of these stocks that's, I don't want to call it a meme stock, but it's certainly an all the rage stock. And that's what happened to Peloton. Really nasty story. So I hope you're not one of the people that got caught in the downtrend. Netflix looks like they're starting their own little downtrend here, right? The stock in March of 2020 was fairly close to its bottom, around 300, and it went up to almost 800. Let's call it 700. It went up to about $700. And then when it went up to $700, it decided, you know what? Things are not growing as fast as we thought they were. And everybody kind of got the whisper that was true. and it started to fall below its 200-day moving average. And look at that candle last week. Look at that candle last week. Huge volume candle. The stock was down almost 25% for the week. It was not a pretty story in Netflix, and I don't think it's going to be a pretty story for a while. So stuff like that is happening out there, and you've got to be aware of it. So we've got lots of undercurrents that are happening. We got this Jay Powell character. You know, we've got the government that's trying to print as much money as they can with these infrastructures and these build back better things and, you know, everything they can call it to make it sound good. But all it is glorified printing money. It's inflationary. The Fed's painted into a corner because if they don't inflate, then we're going to get a crash in the market, and then people are going to be worse off. And it's just a mess. It's just a mess. So be careful out there this week. We're probably going to get some kind of a rip your face off bounce, maybe Wednesday when the Fed just, you know, decides to do what they decide to do. But, you know, I don't know what that means. I don't, purport to know. I can tell you that I'm not on the same side as Goldman Sachs. I don't know if that makes me dumber or smarter. You get to decide. And I don't try to make predictions. I'm just trying to get prepared for what can happen on either side. If they continue to raise rates, this market is not going to go any higher. And, you know, think about it, right? If they raise rates, mortgages get more expensive. That means home builders stop building homes because people can't afford more expensive mortgages. Lowe's and Home Depot stocks start to come down. That's not good, right? If they raise rates, you know, companies that need to borrow money to expand infrastructure don't, and the markets just come down. So it's going to be nasty if they raise rates. If they don't raise rates, we're going to have a high inflationary problem like we have already, like we will continue to have forever. And that's because over the last 12, 13 years, we've printed tons and tons of money. We've printed more money in the last 18, 24 months than we've printed in the entire existence of our country. 80% more money we printed. I mean, you're going to get inflation, duh. Like anybody, even if you haven't taken an economics course, you should know that. And that's what they caused. And now this is what is happening to us. So can we play it? Well, yeah, lots of different ways to play it beyond the scope of this video, but certainly you should be prepared for something to happen either way. And right now the market is preparing for the downside because they think the Fed is going to raise rates. And if they do, the downside is going to be bigger than life. So anyway, have a great week. Be safe out there. Be careful out there. And we'll see you next time. By the way, if you want to learn more, if you want to join some of my ecosystems, we have books and courses and masterminds and mentorships and all kinds of really cool things to get the probabilities in your favor. You know, I help wealthy investors play offense and defense by creating safe, reliable income. But it all comes from a system, guys. It all comes from a system. And if you want to learn to do anything right, you've got to have a system. It can't just be, I watched a YouTube video and now I'm going to go throw my good hard-earned money. You need to learn a system. And I've been doing this for 44 years, and I think I got some really cool programs for you to learn. Anything worth doing is worth doing right. You might as well learn it right. You might as well put the time and effort into something that's going to make you money for the rest of your life. Go to one of my sites. The main one is called hackingmoney.com. You can click there. You can go to the products tab. You can see what we have to offer for you so that you can take your trading to the next level. And maybe I'll even see you at one of my events. In any case, I hope you join one of my ecosystems, and I hope we see each other down the road.